It's the beginning of a new trading week. Welcome back to our week ahead video. This is Mohanad Yakout, Senior Market Analyst at Scope Markets, and today is the Monday, 15th of June 2026. Basically, we have seen a wild start to the trading week. We have seen big moves happening specifically on gold, US oil, and as well as the dollar index. We have pretty much been used to the volatility at the beginning of each trading week, but this time around, it's basically more onto the risk on sentiment. What happened basically that fueled those movements at the beginning of the week, we will definitely discuss. If you stick around in this video, we will also discuss the key risk events that we will be watching for during this week and what are the key technical analysis for the main financial instruments that probably most of the traders watch for. Stick around in this video if you want to know how to get prepared for the week ahead, and let's dive into it. Well, starting with the key things to look for during this week, I've got them basically list down here on the screen. Number one is the Peace Summit. What does it mean? We will definitely discuss. Number two is the FOMC meeting and the press conference, the first one to be led by Kevin Warsh, the new federal chairman, and other central banks meetings and what to expect from them. So let's start with the peace summit and what's going on between US and Iran. Finally, we have seen a tweet from someone that's not Donald Trump mentioning that a deal has been reached. And this is why I got you basically this specific tweet from the Prime Minister of Pakistan, Shehbaz Sharif. It says clearly that following intensive talks, we are pleased to announce that the peace deal between the US and Iran has been reached. This is not Donald Trump, because I think Donald Trump, of course, posted this on his Truth Social account, but I believe this is the number 40th something that he's mentioning that this has been reached. Markets, basically, they don't trust Donald Trump anymore. However, this tweet coming from the prime minister of a country which is the lead mediator between both countries in the negotiations means that it's basically a pretty much done deal. So the war for now has been over. Basically, what markets are looking for is that during this week and ending on Friday, there should be an official signing for the peace deal agreement in Switzerland. Basically, the terms of the agreement hasn't been announced fully yet. Everything on the internet so far is just pure speculation. However, we do totally understand that there were, some sacrifices from both countries to reach this deal. Basically, markets at the beginning of the trading week, we have seen a jump higher on gold prices because of the risk on sentiment, which basically doesn't make sense to a lot of traders, but because on the very short term, the US dollar used to be the safe haven. However, right now we are moving on to the medium and the long term safe haven, which has always been gold. And this is why we have seen opposite behavior on gold moving higher. We have also seen a decline in oil prices and, of course, the US dollar. So, pretty much this is the main hot topic right now affecting markets. We will continue to monitor any headlines from both parties, whether US and Iran. When will the Strait of Hormuz be opened completely again for oil exports and everything? As for now, the expected date is to be on Friday. However, what will happen with the mines inside the Strait of Hormuz and everything? This is something that will yet to be seen during the week. And finally, by Friday, we will see the official signing of the agreement between both countries. Looking on the trading agenda for this week, we do have a couple of high ticket events that we will be watching for. And it starts on Tuesday with the Bank of Japan interest rate decision. Of course, an expectation of 25 basis points of a rate hike is expected, and we'll get back to this soon. We also have an interest rate decision by the Reserve Bank of Australia. The interest rates will be kept as the same levels. Nothing pretty much has been happening with the Australian economy so far, other than elevated inflation levels, which is seen now as a global thing. However, markets see that the RBA will keep interest rates for now, following the global wait and see approach. Regarding the Bank of Japan interest rate decision, basically Why markets are expecting a rate hike of a 25 basis points? We do have a couple of economic indicators to look at. Number one is basically the producer prices. So inflation can be measured in many ways, but one of those is basically to measure the inflation that the producer feels and the raw materials needed in order to provide, goods and services to the end consumer. The narrative is basically the inflation that the producer feels will have to be at some point pushed onto the consumer at some point, which means that if you see that the producer prices are higher and rising, basically this should mean or could mean that the consumer prices will rise as well. Looking at this chart, you can see since March how much the producer prices have been accelerating in the Japanese economy. The narrative and the worry is that if this inflation is being pushed and will be pushed to the consumer, basically the inflation might get out of control somehow. And this is why we are expecting to see a rate hike in the Bank of Japan meeting this week. Something else also to note is the wages, because wages are basically one of the elements that can feed into the inflation. It has been volatile for some time. However, again, if you look at this chart, you can see it has been consistently staying above the 3% level since the beginning of 2026. Some other thing that might basically be worrying for the Bank of Japan, in addition to the declining Japanese yen against all of the major currencies, specifically the US dollar, has been trading around the 160 mark for some time. And this level specifically is a psychological level for the Bank of Japan. So a rate hike is pretty much given in markets during this week. Moving on to the rest of the trading agenda. On Wednesday, basically, it can be one of the most important days during this week or this month. Basically, we'll be looking for the inflation rate from the UK economy. Again, slightly expected to move higher from 2.8 to 3%, which is pretty much given the higher inflation levels across the global economies. And we will be waiting for the FOMC meeting. For this meeting, we should expect interest rates to be kept around the same level. However, something is really important to watch for, which is Kevin Warsh in his first press conference after the FOMC meeting. Kevin Warsh, of course, people speculate that because Trump nominated Kevin Warsh, so he'll be more dovish than hawkish. However, recent data might not be on his side. Basically, inflation is moving higher, and we'll get to this shortly. Labor market is still kind of moderate, resilient. And as per the charts here from the Federal Watch tool, you can see that markets are expecting with a probability up to 97% roughly that we can see an interest rate hold or fixed during this meeting. And moving forward, basically, and starting from 2027, markets can expect to see a rate hike. And this is one of the key questions that we will want some answers for. Is the Federal Reserve considering rate hikes, especially that inflation has been moving consistently higher? Or will the peace summit, which will take place in Switzerland this Friday, which will end the war, be enough reason for the Federal Reserve to stay on the line and say, well, inflation is going to drop back again after the war has finally ended? This is a chart for the inflation prices in the US, and recently we have seen a jump to 4.2%, mainly because of the jump in oil prices. However, what's even more concerning is that the core inflation prices without food and energy is also has been trending higher to 2.9%, and this is what we call as the inflation spillover. If you have oil prices high enough in the economy for a long period of time, pretty much everything in the economy will face some levels of inflation, goods or services, because oil basically is one of the engines in any economy. Moving on to Thursday and Friday, we will be having also some data from the UK, specifically the unemployment rate, and another interest rate fix from the Bank of England. Pretty much nothing to discuss about that. And on Friday, the last thing I'll probably be watching is the inflation rate from the Japanese economy. So we have a pretty strong week ahead. We have a couple of things to look for: central banks, hot topics, geopolitical events, and so on. So please make sure that you follow the risk management. And let's dive into some technical analysis here and see what are the key levels on one on or on the key instruments, financial instruments. Here we will start with the dollar index, and basically we have started to see some declines on the dollar index, not only today but even from the last week. This is a key supply zone on the dollar index, just above the levels of 100 points. We are starting to see a move lower. Basically during the week I'll expect to see more declines on the dollar index, and basically the levels of 99 points on the dollar is the first demand zone. I'll expect to see some minor retracements from. However, if we break through and below the 98.75, I'll expect that the following demand zone is just around the levels of 98 points. So if things continue on the risk on sentiment and the general optimism mood in markets this week, I'll expect that the dollar will continue the move lower. Moving on to gold on the daily time frame. Basically, we have explained gold has been moving opposite to the normal safe haven mood for metals. However, from the declines that we have seen from the levels of $5,600 per ounce back in January or February of this year, we have seen pretty harsh declines. However, since I would say the beginning of April, gold was trading in a sideways, slightly tilted lower trend. I mean, yeah, we still registered a new lower low. However, when you look at momentum, you can see a clear bullish divergence. What's a divergence generally? A divergence happens when prices are behaving in a certain manner, and basically the momentum indicator is on the opposite side. So on gold prices here, you can see a slightly lower low that was created previously or basically last week. However, and you can basically doubt if this is basically a lower low or an equal low. However, on the momentum indicator, you can see basically it's a higher low. So momentum says, okay, even if prices are moving lower, momentum is holding its ground. And this is basically one of the reasons, or one of the indicators, that the trend might be nearing to end, or basically we can see a probable reversal soon. Currently, prices are trading just around the $4,300 per ounce, and I would expect that the next resistance level during this week should be around the $4,580 per ounce. Moving on to crude oil, basically with all of the optimism happening in markets this week, we are moving lower. We are seeing lower prices in oil. However, the new prices for oil after the war is that we will not be moving lower than $80 per barrel. This is my own personal expectation. The damage done to the oil infrastructure has already been done, and it will take years for markets again to see the same production levels pre-war. So basically, you can see even technically we are still in a very wide sideways range. As long as prices are basically above the $81 specifically on WTI crude oil, I can expect more of a sideways range, not a clear break lower. Even if the war stopped, I mean, at the end of the day, again, the damage done to the infrastructure will take a couple of years to get to pre-war production levels. So I can expect oil to move lower from the current levels of $85 per barrel. However, I really believe that the floor for oil prices during this period should be the levels of $81 per barrel. And moving on to the S&P daily time frame, basically S&P is moving higher because of the optimism again, and even from the previous week, and because of the IPO of SpaceX and all of the optimism around it. However, I do expect that we can face some resistance around the levels of 7,600 points. Of course, once cleared, we are aiming for all-time highs, and this can be one of the good trades during the next period on the US indices. That was all for today's video. Thank you so much for watching this. Please make sure to subscribe to our YouTube channel to follow us for more videos, and I will see you guys in the next one.